avoidance is legal, but is it morally acceptable? That's what we're discussing now on Radio 2. The former Conservative Party treasurer, this person who in about 3 days has become incredibly famous, Lord Fink, having never been heard of by anyone before, told a London newspaper, everyone does tax avoidance at some level. That's what he said. He'd been threatening to sue Ed Miliband after the Labour leader named him in Parliament as one of the UK citizens with a tax-dodging HSBC bank account in Switzerland. But then there was a kind of handbrake turn by Lord Fink, because he admitted to the Evening Standard that he used what he termed vanilla measures to reduce his tax when he worked in Switzerland in the late 90s, and he then said he had nothing to hide. So is he right on the broad point that everyone does tax avoidance? Does everyone avoid tax when they can, be it a family trust fund, a tax-efficient pension, a simple cash ISA, or saying, pay me in cash, please? Maybe when a loved one passed away, your whole family did your best to avoid paying too much inheritance tax. It's been pointed out that the Miliband family did exactly that. Or is it simply immoral to try to dodge tax whenever you can, however legal it may be? Call us 0500 288 291. Email vine@bbc.co.uk. Find BBC Radio 2 on social media as well, particularly Facebook. Let's talk about Lord Fink, the famous Fink, first of all. And Chris Mason, BBC political correspondent, joins us.
Afternoon.
So hello to you. So how do you read this one, Chris?
Well, I mean, it all started, didn't it, in the bank vaults of Switzerland and the gigabytes of data that were sneaked out of HSBC. And where are we now? We're in a muddy, moral, political tussle. Not over illegality, not over tax evasion, but this issue of tax avoidance, legally trying to minimise your tax bill. Why does this make the political weather? Well, the Chancellor, George Osborne, has talked about aggressive tax avoidance, whatever that is, as morally repugnant. And, of course, the other thing in the political climate at the moment is there isn't much money about for governments. And so, ever since the financial crisis, governments of every colour all over the Western world have been rather keener to track down incidents of tax avoidance and evasion to try and ensure as much money is flowing into their coffers.
And are we clear on what Lord Fink is admitting that he actually did? Is it to do with the Swiss HSBC accounts, or is it something else?
Yeah, he says, look, he was working in Switzerland, and when he moved to Switzerland, he needed to have a bank account to pay for his groceries and all that kind of stuff, which you would expect if somebody moved to a foreign country. In addition to that, he acknowledges that he did this, what he described, vanilla, bland avoidance measures. So he did move some of his assets to Switzerland because it would be more, to use the phrase we've heard rather a lot of in the last few days, tax efficient. But, he said, entirely legitimate and above board. And he said at the vanilla end of the spectrum. So he says that accountants suggested various ways that he could invest his millions. He's a very, very wealthy man. Some would have saved him more in tax than the ones he went for, because he went for ones at the blander end of the spectrum. It gets into some very interesting territory, this, Jeremy. Imagine you're walking through the park, or you're in the countryside, and there you are, and a big, hungry-looking dog tears towards you, and you think it's going to sink its teeth straight into your thigh. You might just conclude it's aggressive, but wait, here comes the owner of that much-loved family pet, and those words come out of their mouth, "Don't worry, he's only being friendly." Aggression is in the eye of the beholder. So what counts as aggressive tax avoidance? You end up having a hugely complicated moral discussion to which there isn't an easy answer.
Thank you very much, Chris Mason, BBC political correspondent. And what counts as vanilla as well? Jonathan Davis, economist and wealth manager, joins us, as does George Turner from the Tax Justice Network. I know you're rushing, Jonathan. Sorry to keep you waiting. Is there such a thing as vanilla tax avoidance?
Absolutely. You said it earlier. People invest in an ISA who put £200 a month or £100 a month or £10,000 into a personal pension. That's tax avoidance. And yes, that's vanilla. Also, if you are sent abroad for a few years with your employer, then you can earn your money outside of the UK, have your income placed in somewhere like the Channel Islands, which technically from a tax point of view is not the UK, even though of course it is a UK territory, and that is deemed offshore. That is vanilla. It's entirely reasonable, entirely moral, and of course the big picture issue is it's entirely moral to pay as little tax as you possibly can because governments don't spend money effectively.
George Turner, that's a good point. We'll go on to some other examples, but putting your money offshore when you are working abroad is not illegal. Is it wrong?
Well, I think the point here is intent, really. We always have to think, what is the intent? And that's what the government has said with their general anti-avoidance
the intent
rule.
is not to pay too much tax.
Well, but the intent is, are you creating a transaction which is artificial in order to take advantage of a tax exemption, a tax break, or a loophole, which was never intended for that purpose? And that is avoidance, which is can be clawed back by the HMRC under the new terms of the General Anti-Avoidance Rule.
Can we agree on that, Jonathan? I mean, let me give you an example. The Chris Moyles case, former Radio 1 DJ, where he set up a second-hand car business where he claimed he'd lost £1 million trading £3,000 worth of second-hand cars. He offset that £1 million loss against tax. So he shielded his money from tax. The whole thing was struck out by a court, by a tribunal. Is that acceptable? Because on the face of it, it looked technically legal when he did it.
There's a movie out called 50 Shades of Grey. There are 5,000 shades of grey in tax planning. If you're asking me, my personal view is that is not vanilla. It is aggressive tax planning. It's almost on the side of dodgy in the sense that you're creating a scenario where you've, quote, lost, unquote, money. Therefore, you're entitled to a reclaim from the taxman. I would say that kind of tax planning is aggressive and inappropriate. But we're not talking about that. We're talking about tax avoidance, which, as Lord Fink said, basically everyone does. And he's right. Practically everyone does tax avoidance, and quite right too.
Let me try you on a second example. This is a bit softer. There is an exemption in inheritance tax law involving farms. If you have a farm, you can pass it to your sons and daughters. You shouldn't have to sell it. That's, I guess, quite right. Most people support that. Rich people started buying farms as a result because they could shelter their money from inheritance tax. It's perfectly legal. Now, is that acceptable or is that a dodge, Jonathan?
Again, you're asking my personal opinion.
Yep.
My personal opinion, if they're not actively in the business of farming, then that's a dodge.
OK, George Turner, you must agree with that, I guess.
Yeah, absolutely. I mean, that is it. It's the principle. Are they trying to avoid something through using a mechanism which was never intended to set up?
What if the rich person... I see you both now coming down on this, which surprises me. But George, what if the rich person says, wait, I've always had a long lust after farming and I want to farm on it. Okay, I can't get there much. I only go there once a year. I've hired people to farm it. It is a working farm. What's the problem? Why would you tell the rich person they can't do that?
My grandfather's generations were farmers, and I think
exactly.
they wouldn't consider that person to be a farmer if they visited once a year. I mean, this is... I would presume the government set up that scheme to give farmers the ability to teach their kids how to raise a farm and to pass on knowledge through generations without this being excluded. Now, that clearly is not what is happening in the case that you are
one more for you then. ISAs, Jonathan, you've mentioned. Now, an ISA shields, what is it, $7,000 a year from tax?
15,000.
15.
Oh, cash ISA. Well, yeah, towards 15,000. Yeah.
Okay, is that a tax dodge?
Yes, it is, in the sense that you are reducing the tax on investments. It's not dodgy, it's vanilla tax avoidance, and it's entirely within the spirit of the law. I need to go back on the farming thing.
Yeah.
Many of these tax rules, tax loopholes, have actually been set up by politicians after the lobbying of the professionals to help the super rich. Well, these sort of tax loopholes, which actually largely grew ad infinitum over the last 15 years, they need to be shut down. Unfortunately, Jeremy, even since ancient Greece, the super rich have rarely paid the same percentage of taxes that you and I pay.
Let me just try George on the ISAs. You don't think ISAs are a tax dodge, do you?
No, not at all. I mean, it's going back to this idea of intent. I mean, this is
You are
surely
avoiding
not
tax
the
if you take
answer.
one out. But if somebody's got 7 or 15 grand, which not everybody has free, clearly, and they're able to put it in an ISA and dodge the tax, somebody else has to pay tax on all their earnings. The argument goes that that's jolly unfair.
Well, look, the first £10,000 of what you earn is tax exempt, right? And people don't claim that people are engaging in tax avoidance by working, right? And it's the same thing with this. The government says that they will not tax you on £10,000, £15,000 if you put it in an ISA. There is no chance that will ever be clawed back. That is an exemption. You have no obligation to pay. Avoidance is when you're stopping an obligation through fair means or foul.
OK, we are discussing the words of Lord Fink, who said that everyone does tax avoidance at some level. Is he right? Thanks to Jonathan Davis, economist, wealth manager, and George Turner from the Tax Justice Network.